Hey everyone, welcome to Principal Profit Traders, February 14th coaching call for Bitcoin. We're going to get into it. So notice I'm zoomed out here, right? Because I just want to keep in mind, right? Even though this has been on the short-term bias very volatile, if we kind of zoom out a bit and just look at what is likely to happen and what has happened in the past, right? The most unlikely scenario is a very strong V recovery based in the past, right? Especially after we've broken this important support zone that's now resistance. Even if we get a short-term pop, which I did mention could happen at this double bottom, right? We have that area of resistance, right? That's in confluence with this larger time frame bias downtrend as represented by this moving average here, which is the 20. So it's not like, oh my God, now this is the lows. I think needs to be a time factor, and I think things could still get lower, right? Just based on how prices behaved around this high volume node. Notice, like when we were forming the high volume node, even while it was very mature, there was um, sorry, my dog's. I said, no, let me get back to what I was saying. Sorry about that. Notice when we were forming the high volume node of the VPOC, it was not acting as support and resistance. It was just basically a running profile because we were going around it. It's only when we move away from it and spend a huge amount of time, as you can see, the more amount of time you spend away from it, the greater the odds of a reaction, and then go back and test it, that we had this swift, right, recovery, short-term recovery after it. So yes, if we just get rid of this for a minute, we did have this. We have been in an intermediate term and now larger time frame bias downtrend. It's now confirmed from this low, which is the giant balance here. And this happened around October 6th, but then the last really strong leg was on January 16th. That was the last chance, in my opinion, to get out near 100,000 for a while. And since then, we've had a huge decline of over 40%. We went from around 100 or 98 down to just under 60,000, right? And then, we did have, now notice that when we're in the middle of a trend, right, we have the strongest leg in, the strongest candle towards maybe an end of a trend. If you just kind of look at the lengths of what's typical before there is a retracement, right? So that's within the context of, right, that right, there's that high volume node, which I just deleted. But I also wanted to say that when you have the largest candle at the end of a down leg, it signals a reversal. This signals strength, but you want strength at like the start of the breakdown. Like this candle would have been nice up here. We would have had maybe a bigger move down, or up maybe towards here. But when you have it towards the bottom of a leg, that often can signal the end of a move. Now, we didn't have a lot of reaction towards the end of the day. I was hoping maybe for a pause day to signal it and then get an up day. But what we got was, a slight, breakdown of it, and then a huge, right? Not a bullish engulfing candlestick for the candlestick pattern category, but rather a piercing pattern, which isn't as strong. It's not like we engulfed this huge down day. It's like we went down 13% and then we went up almost 10. So if you just average those two out, it's like, well, technically this is still down more, but we engulfed a lot of it. So what happened typically when you have a downtrend day, the lowest odds day after you have a downtrend day or any trend day, really, all things being equal, is another trend day. It's very rare to have two consecutive trend days in a row. It's more likely to have some congestion. Not that they can't happen. Like when you have a certain, like when I said that when there's higher pre-market factors for a trend, like when you have a time frame alignment shift and whatnot, you might have more consecutive trend days in a row. Just less likely, right? And certainly less likely because we've been going down quite a bit into that support now, which is about a similar range before we started to have a bullish short-term retracement. And it was the largest candle, which usually signals exhaustion. Okay. So, but the piercing pattern is pretty strong for the bulls. It's a strong bullish case. It's at least holding structure here, right? But you could see it was trying to rise in agony, and this was still down. It was still a bearish larger time frame bias. So basically, we needed another leg down. When it got about halfway between here and here, if you can just imagine this on a 2-day chart as like the average of a buying tail. Usually like to go halfway between them. So that's why I said I would not, When I mentioned the Bulls do have this double bottom here and a poor man's zero line reject, I said it was a poor man's because I would want the CCI to be up here and the turbo to be over. This is just how I have it colored. Okay, so but it's the opposite of that. It's kind of weak, but it's still got us. It's still. I'm talking about when it was here, this double bottom. Yeah, and then we had another day, and then yeah. So we've had yesterday was a decent day. We got like 3.89%, and right now, because this was a bullish engulfing candlestick pattern, that was sort of a category that stood out. That it's short term exhausted and whatnot. But remember, if you think in multiple time frames, this is just what's likely to influence tomorrow. If we zoom out on higher time frames, we're going to try to look at different time cycles and different ways of looking at the weekly and the monthly, and we'll take a look at what's likely to happen. Like, let's just go out to the 2-day chart. The 2-day chart's nice because it helps us look at trends. We talked about this leg down, now this leg down to get an action reaction. Remember, the more leg counts you go down, the higher the odds that we then switch from a down market. Because technically, even though this went sideways for a mile, it's just congestion within the context of now a down market. But all downtrending markets end in a balance, and all balances end in a trend. So it's like the least likely one from a time cycle perspective is now we have a V recovery. It would be more likely that we have, look at this, we trended up, right? Then we had to congest for quite a while to get another energy for a trend up. And then then we went down, and then we didn't just go up again. We went sideways for a while. So, that's the idea. The idea is that markets just don't go up and then down and then down and then up. You have to think in terms of a time cycle here. Hang on 1 second here. I have to figure out how to let people in the room host tools. That's how I do it. Yep. Okay, I got to go here. Enable waiting room disabled. Okay, good. All right, now getting back to it. So yeah, when we talk about multiple time frames, it helps us, determine what we're thinking about. So even though there was, like I said, there was a possibility of a double bottom because it went halfway between these two merging piercing candlestick patterns to get some action reaction, and we did get a decent move up, right? But it's not so much now you think that okay, the lows are in, now we're going to just straight go up because there's a lot of resistance. We broke this kilo. We know that it's very rare to go from a trend down market then into a V recovery. You would have to most likely go for some balancing first, and that balancing can be quite volatile. We might go up here, right? Test this zone, even maybe shoot up, hit this, and then have a strong move down where we get magnetized down here again, and then it forms something that's pretty volatile like this before we get some recovery. Which I can show you on the weekly chart, because even though that double bottom was influencing what was going to be happening on the next day or two, that's not necessarily what might be happening, in the next month or two. So you have to be able to think like that in terms of multiple time frames, since this is a multiple time frame strategy. Now, I can get better data if I go to here. The other thing you have to think about is, how prices behaved in the past, because we know the previous market behavior influences future market behavior. And right, I mean, if you just look at the past, after we have patterns like we have two tops like this, two tops like this, and then for the entire bull market, we've had a golden cross until we have a death cross where the slow crosses above the fast. And then, we have a bear market. And I would say we are somewhere, if you look at where here's the death cross, here's the death cross here. We've moved decently down from it, right? But when we moved down from the death cross, it was like death cross. They went up and then one leg down and then two leg downs from the death cross. Here's a death cross, kind of got to one leg down. We haven't gone two legs down to the death cross. And even if you bought here, just because from a price level you might DCA, you still had your capital tied up for almost a year before you even broke even. Do you really want that? At best case scenario. I don't, you know what I mean? Like, this is higher up, you don't know. So this thing could go sideways for quite a while. And then if you just look at the past other times it's behaved like that, it's this was 2022 behaved like that. Let's go to 2018. Right here was a death cross. Here was a double top. Everyone thought it might recover. We might go higher. Death cross happened. Right, bull run for the entirety, pretty much up market. Then it goes sideways market. Then it goes down market. Right, and this was actually the down because you really want to sell on strength at double tops and things like that. I think when the last leg gets really crazy looking after multiple 5 to 8 leg counts up. I mean, why would you get super greedy? Look at all the silver greedy people. It's like, why wouldn't you take profits at that point? So same thing here, right? Up above it, cross, death cross. Now we're going down. And the time, and you have to shift your cycle on it. And it's, you know, this is the blow off top. And then the volatility shrinks, and it's just this choppy two-sided market. So as a day trader, you have to be aware of this because it's like you're not thinking, oh man, I can't wait to have these crazy trend days. I'm going to be holding runners forever. No, they're going to be choppy sideways days. And if you have the ability to shift your bias like that, you can make a lot of money because you can go long and short in the same day. The other cool thing about it is that you can shift your market in any phase to start being in alignment with that. So if we go back here, when everyone thought that we were going to have some type of balanced breakout, when I said, no, this is most likely a rising wedge, and I gave all the reasons why. There's a high volume node here, all kinds of things. There's a death cross. There was this potential head and shoulders. The risk reward from an expectancy place wasn't viewed. There was a hook from extremes. The RSI didn't look good. All these reasons, a litany of reasons that you should not hold for a little bit of potential reward, so this was not a balanced breakout. This was a false breakout pattern or a rising wedge breakout, and they usually always just dump. This dumped a lot more than I thought it was going to dump, actually. It just dumped. We broke right through this bottom, right? And then everyone's like, oh, now the bottom's in. Well, why can't I just build a node here first? I mean, this is a shocker. And then you have the same people coming out that are saying, oh, this time it's going to be a super cycle. It's going to be different. Well, they said that last time too. I mean, why would it be different? I don't see why human behavior would change. Now, right, we have that. It's just same thing. It's like this was the bull run, and then when we finally broke between these moving averages and had the death cross, there was the bull run was done. We're in that down phase, and why can't we have another whatever? So let's look at the time. If we just go out another cycle, let's get rid of this for a second. These are our time cycles that we back tested that work really well. And we're still kind of we're not at an area where there might be a time perspective. This might be around the low. Maybe you look like a genius up here, but you would have to, maybe you wait from February 2nd all the way to May 11th, possibly. And, maybe this won't be right this time. I mean, it's not perfect. It was pretty good here. I mean, if you think this had to be the area, this was only off by like a week or two. For real, 7 days. That's nothing. And then we still had one more pop into it, which should have also been a crazy exit. That would have been a beautiful exit. Really awesome. Hook from extremes there, really pronounced. We didn't have a hook from extremes when we had the second exit up into here, but we had something almost even like we had a hook. This was a crazy inverse zero line reject. That gave me a lot of confidence that that rising wedge pattern was going to happen, and we had it. And bam, right? So you just can't think like, oh, now we're going up or whatever, or bring some hopium into it because this area may hold on a general level, but why can't we just have some really congestion around it? It is an area that served as resistance around November 21, the last bull run high, and then we had a launching point of directional conviction. So it's a multi-year thing here. 21, 23. So it's important. It's major support, right? But at the same time, the larger time frame bias has been down. So you got to balance these conflicting energies and say, okay, well, what's going to happen? I don't know yet. It'll probably be more two-sided than anything before this thing might continue for a bit. These things are always behind anyway because they're actually leading indicators, but you can see that this RSI is still bearish on the 1 week. I also have here not only the time cycle, but I have another death cross looking moving average setup here. You can see these are slightly different. You get this experiment with all different types of moving averages. The one I just used before was the 200 and the 50. That's a common one that people use. These ones are slightly different. Okay, and but you could just see like move them around and see how well they work. For this entirety of the bull run, the at the very least, this moving average on the bottom is active support. We never broke it. Now we broke it with conviction, popped up into it once they crossed, and market is done. Go back over here. Same thing. Uptrend, moving average, golden cross, acting as support, the blue one, and for the entirety of the last bull run. Once we finally broke it, and everyone saw this is the same fucking pattern. I was like, what the, and then like bam, and then it goes up, and then it goes down again. It's the same thing. Everyone's like, oh no, we're going up, you idiot, you have to buy. I'm like, yeah, you might hold it for a really long time here until we get if you really want to win, not even with looking at support here, from a time perspective, the golden cross happened right around here. So if you bought anywhere in here, at least you got a good move as well. If you wanted to wait for confirmation, but you don't have to do that. But just the idea that that time phase didn't happen. The longer this matured, it had better odds than to therefore go up eventually, right? Because you had a sideways market, you had an up market, then you had a sideways market, then you had a down market, then you had a sideways market. You're not going to have another down market. You're going to have an up market because that's usually the pattern that happens. Then you had a crazy up market that we had, like beyond anyone's wildest expectations. This is a crazy run, and everyone thinks that it's just going to recover now. That there's not really happy people. I mean, bam, bam. Um, and a lot of these institutions and larger pension funds are managed by portfolio managers that have a really longer term outlook. I mean, Kathy Woods has been going on all the MSM and preaching to boomers how the low was in around 90,000. And so was Donald Trump's son, Eric Trump. And, that was 40% ago. So, at least at the lows. So it's like you really want to be that, almost use them as a contraindicator. Actually, that's what I was thinking at the time. Anytime I add edges where everything gets really bearish, and then you get an emotional response from somebody, I use it as a contraindicator, which actually adds to a bearish weight. So, just that's what the system is allowed to do. Now, if we go to the 2 week here, this is flatlining as well. It still hasn't crossed anybody's favor yet, but I think the weekly shows this one really well. And let's get out of this weekly one, and then we'll go into this other thing I wanted to show you. And just notice that, like, just in the past, we had like huge runs. This indicator indicated that it was green right when it did have that area that we sold last time, similar to this 2020-22 one I'm just showing you with a different type of indicator. And then the same thing happened. You had one leg down, two leg down sideways, even three leg down, then up. Okay. And after you broke it, one leg down, two leg down. After you broke it, one huge leg down. It's like, whoa, you know what I mean? And then also, like, look, this just started to turn red. And remember, this one just started to turn red right when this one popped up. It started to turn red for the first time for the entirety of this bull run. It was green. Then it broke those two moving averages, confirming it on the weekly. Same way of looking at it, but we're using this other indicator. Now this is turning red, popped up, turned red right when it popped up. And then look, now it needs its time in the sun. This thing, you know what I'm saying? Like this was March 20, 2022 to May 2023. So almost a year or over a year. Yeah. So it's like, well, I don't know. I mean, that's to even break even, assuming you bought somewhere around here, right? If you bought whatever, like right when this broke out, that would be buying here. You would you have to be if you wait up here, oh my God, you're amazing. And meanwhile, you could have had the huge opportunity cost, even assuming this time it works out, you never know. So there's a lot of risks. Capital tied up is risked up capital. It's not working for you. That's why if you are getting in just because it's a level, then you would probably be a shorter term trader switching a little bit to a neutral bias because you can have longs now because it's over short term, uh, mid to longer term oversold. But also no, just look zooming out from a higher time frame. We look at this bear market. So if I just kind of get some type of a so this gives kind of the level. Once we broke from this, we hit the lowest here. It also gives the time, and then this shows the little bit of recovery. You're still not break even yet, and then finally, I'm assuming you got in on the first leg. So I mean, I don't know, just because that happened that way doesn't mean this will happen, but just it just gives you a sense of human behavior, and then you just got to go back in time and do it as much as you can. And this thing can go out to so even though the previous time cycle that I showed you on the weekly has a more it has that May prediction for an inflection point. Keep in mind that could be like for a false rally or something like that could be, you know what I mean? That's like best case scenario it goes up. Then this one has a recovery if you just mimic this from almost towards next the end of this year of like a September, December fourth quarter kind of recovery rally that would kind of then start here, and then we're like, oh wow, well, then it does suck to think that, but you also can make more money just looking at the market objectively. Like the fact that a lot of people shadowed me and are all out of their portfolio for Bitcoin and Ethereum and SWI and everything else I said, and now are in Tether and I haven't gave a signal yet. As soon as I give a signal, this becomes a winning signal. This becomes a huge. Not only do they save 40%, they're going to be buying 40% more at this low, and the compounding is mind-boggling. Rather than if you were just some portfolio manager who's got like a 5 year or like a Kathy Woods who hasn't sold or done any repositioning. If you Google her, if you put her into AI, her accuracy is very low. I already did that to fact check her, and now she has capital tied up in hopes that it works out. Meanwhile, when you're constantly exposed to the market, you have black swan risk. I mean, I saw an article the other day that even said that Tether was at risk for some reason. Which I mean, I hope none of the guys that own Tether in that damn Epstein files, because that might lower. You know what I mean? Like anything could happen where they just start to get unfavorable, and then, because a lot of us are stored in Tether as a hedge. So you got to hope that that asset does well. Apparently, they do have real assets backing them, but you never know. So just always risks. That's it. That's all you said. That's what you have to accept. But yeah, I mean, just looking at the past. The other thing too, just from a volume perspective, notice that when we did kind of get more towards the end of this, we had a huge volume spike towards the end of it with a big move down. Like I said, the more leg counts you go down, and then the bigger the volume spike, it signals exhaustion, in this case, it would be the end of the downtrend. We really haven't had that type of volume at all yet. Then we have this. This was the COVID anomaly. We did have that volume then, which signaled the exhaustion, just like this. But notice we don't have that level yet. And that was, one of the one times, if we keep going back in time, that was a COVID event. I mean, that was not a normal, you know, that was not a normal thing. So I'm not going to bet on the thing that's anomalous. I got to bet on the thing that happens more often, where once we broke through this champ. But notice that, like, when we did have that false run up, it started to turn red and then it went down. Yeah, it's true. It did turn red here. See how this one was the false one because it was red just like this. And instead of me looking at this one and saying, "Oh, I'm going to keep holding here," I told everyone to go out. And that look what happened. More often it did this, and then this was the one time we had the crazy run. But there was something else about this one that was different. I think it was on the larger time frames. I don't know if it turned red yet, but um, yeah, yeah. See, falling wedge, bullish, rising wedge, bearish. This is a pure balance breakout pattern, so it's different than those other two. Very similar, rising wedge, bearish. And I don't have that drawn on this one, but this one gives me more data. Besides the anomalous event, this is a very, the 2018 is a good example. I don't know why I don't have more data than this. Is it because of Coinbase or I'm not? This only goes back to January 2015. I'd like this to go back a lot more. So that's my take on this from a multiple time frame perspective. Oh, let's get out of this. I'm not going to save this. Yes. Well, we could have a potential reversal of this last couple of days, short-term bias bullish and some moves up. Just keep in mind, like this doesn't mean that the end is in because then it would be the anomalous COVID situation where now we're going to go up all the way up to 126,000 and then break out. That would be uh, the anomalous situation, especially given that we broke this, which switches the bias down now, right? Where we might have to build structure like this around a node to then have enough potential energy to have another trend up, which, that's the whole idea of the time cycle. Simple thesis, no um, motion involved in it, just looking at what is presented in the past and saying, okay, this is more likely to happen because it's happened more. And then, multiple time frames. It's like I'm not open to longs necessarily yet for repositioning a very large portfolio with big transaction costs, but a day trade on a futures, right, or a short where I can get in and out quickly because there's a lot of sideways uncertainty. Yeah, that's something that I'm doing. So until I see something more mature of the fact, we are building this double bottom, yes, but we are doing it in the context of under a death cross. After we had a huge top, a huge run up, red pattern breaking really underneath the lower band of the meridian line of the Gaussian channel. So this and on top of it, like I said, I mean not that I am against this succeeding. I have to be open to it. I did say there was a double bottom, and this is when I did get out of my short. And part of me was like, switch your bias now and go long. It's just hard to like really. It was hard for me to just flip my energy short or long like that. I think I just was happy that I was right up here making money, but this was the right move because of the double bottom. But at the same time, the momentum is really weak on these moves. I mean, we're having up days with 28. This was what yesterday's creep up was kind of a fake out because we had sort of a really low volume. And we still have this. Now we have more of an inverse zero line reject, which is like saying this momentum is kind of suspect. So I've actually not entered any new positions right now today. After I exited that short that I gave live on the channel, I I think I'm just kind of letting the cards fall so I have a clear context. So yeah, I mean, this was two areas I shorted once we were below this 4-day high volume node. Then we had a pure up trend day up into it. Notice the longest leg up into it towards the end is when it got exhausted straight up into the high volume node. Most people would have swing highs and swing lows, but they would miss this key uh, hidden area of support and resistance, which allowed me to have edge when I shorted this and shorted that, and also other reasons why. But notice I didn't give a short up here once we had that pure trend day because one, it was late in the day when we don't short against a pure trend day, and it just made sense not to stay out. Now, after you have a pure trend day, the less likeliest thing is that we're just going to break through all those and have another pure trend day, like especially with low volume. So after you have a trend day, the odds are you start to rest and congest. But we did break above this key high volume node. Now it's not like a 2 week one; it's a 4-day, 1, 2, 3, 4 day or so. And we didn't have a huge move down from it, so it's all whatever. But we did break above it. So when we did come up here into this initial resistance, which was this key swing high here, right? We had a down move, but it wasn't like, oh my God, we're gonna have a down day and it's gonna reverse all this because now this key volume node, which was resistance, is now going to act as support, especially on first test. So if you took this here, even though there's this ugly island reversal pattern, you had still a bullish intraday bias because we were green on the day. And if you were sideways, you might want to wait a little bit lower. But noticing that you had a high volume node, I thought about almost taking that, but I was like, oh, it'd be more of a scalp. It's kind of, needless to say, we went down. That was another possibility to take it again, but you have to understand the context today is that not only after a trend update do you most likely go sideways, you're sandwiched between a high volume node and this strong move down here and this key swing high here. And then obviously the real zone is up here of this balance here and whatnot. So yeah, it's like the markets just don't go straight up. You wouldn't get excited and see this and just say, I got to buy somewhere as it's breaking out because you might find yourself on the wrong side. Now, that notice, see, I had this zone. I didn't just draw the zone after the fact. I had this key. This is how you draw when you do your zone building. This key reference area was definitely useful for here. But also, the other reason I didn't short this too is that the larger time frame bias can also be seen by a directional trend line. So it was also having this was close enough to this and this where we had a confluence of directional and horizontal support. Same thing with this was more of a double top near this one and sort of near that, but I don't think I had it that high. But it was also had that, right? But once we broke this, right, then we just have horizontal and it's against the trend day. So it could just like go whipsaw sideways, which it is, but at the same time, if this broke and you're like, oh my God, we just broke a high volume node. Matt says the trends start from high volume nodes. I'm thinking, yeah, they do usually when you go sideways around them for a long time, and we did break down below it. Now we're just testing it. So that's not the right use of it. At the same time, you have to look at other things too. Why would a trend start today from a high volume node after we tested it? We have really low volume. And we also had a trend day yesterday, and we know that they don't usually happen two in a row or three or four, even less in a row. So it's like that. These are the type of odds that you have to balance when you're thinking about what it's likely to do. Very low relative volume, most likely going to be a choppy two-side day. At the same time, when you bought here, it wasn't likely maybe to just have a downtrend day because the intraday bias was still up. You just have to realize, like if you bought here, you still had a really tight stop below this because it's such a choppy day usually from what the volatility's been previously. I mean, look at this volatility we had. So yeah, just don't for even though we've been building structure here, just don't as we're coming up into any of this could ignite a bearish bias because you have to say to yourself, well, it's not really a mature balance on the daily for a huge like it would be a V recovery if this was actually going to be the low lows now. So short term, yeah, we're getting some relief, but it could also just be part of a bigger sideways bounce that we can't really, it's not really there yet. It sort of kind of looks like, we trended up, but then we went sideways for weeks, right? Oh my God, reverse not, reverse not. And that gives all trends again start from a balance. This gave us enough of a balance where we rose up against it. Now here it bounced, then you had one leg up, tiny bounce, two, real quick. Right? Because you could have quicker legs in the beginning, especially after a bounce. This was the same idea, right? Except there was a downtrend. We bounced and we broke down quick, pull back quick. And now, the more extended it gets, the more likely it needs to rest to figure out what it's going to do next. Is it going to continue another leg up? Is it going to? I'm guessing that this is not going to be the low because of how it's behaved, because of how it's broken below this death cross and how it's behaved. Or when we saw that in the past, it's broken this key support zone, right? Which shifted. I mentioned that a while back that would shift us into a bear market if we broke 74. We did with conviction, and right. I mean, even if we come up into this and break this small structure, we have all this resistance, this high volume node, this moving average, this resistance zone. And we would need to see incredible amounts of volume. Now it is creeping up, but I mean, 28% doesn't give me a lot of confidence because trends are often correlated with volume, and you just need as much edge as you can get, and that's why I'm not like looking to buy today on a pullback or anything, even though this was a pullback, and I was like, okay, that's a pattern, but also a reversal pattern. I would never buy that in isolation on any day if there wasn't this key zone here, right? The low of the days here, right? If the zone's down here, if you want, and also it's a reversal pattern intraday in and of itself. It's called an island pattern because it broke into this key swing high, which broke, which was right in confluence with this high volume node and this move, which broke down here. You could say, okay, I fade key reference zones. It's more than just I fade a double bottom. I also fade key reference zones. That's a key reference zone. So you could have faded it, but I just didn't give it as a signal. I didn't take it, and because I knew this would be something like a mediocre move. Like I'm not thinking, oh man, now this thing's gonna go up here and then we're gonna have a breakout. It's like here, maybe not even an inverse RR, and now we're just kind of chopping around. We'll see what happens. Maybe we'll get another leg up, but then we still got to contend with some pretty powerful resistance here. At the same time, there could be, like I said, right? This was the down move, right? Then we congested. There's a little cup and handle, maybe short term, great, but still zooming out, you'll see that it's not a really fantastical bigger picture pattern, right? Today is the 14th, and it started to congest on the 7th. So this is now an intermediate term bias for a 1 week, which started up here, and now we're here. So it's technically almost like neutral, even massively neutral bearish because it's a little lower, but neutral, right? This was really strong up, but if you take it 1 week to even 2 weeks, and we go back from the 14th to the 1st of February here, right? We're in a movement down, then up, then down. So it's technically still down on the intermediate term bias. The short term bias could be 1 to 4 days, right? At this point in time, because we had such a strong, the candlestick pattern really stood out here that we at least engulf this. We might have a little sideways up action, but that's why we have all that resistance zone because we're not gonna discount that up and just start DCAing and hope for the best because we'll have our capital tied up for a while because of all these ways that price is behaving as it gets to this level. This level has launched us in the past. Remember when it launched us in the past, right? It was because we were in the middle of a trend and now we were in a pullback for another leg up. Here we've had the triple top climax, we've had the inverse in shoulder, and now we had the death cross. And this was truly just a real pullback in the context of a continuation of a reasonable trend, which will start relatively soon. Then it should have held that moving average that it held the entire time. I mean, that's a fair assumption to make, right? Every time we held it, held the purple, or didn't even get to it, held the purple, destroyed the purple, pull back, continuation pattern now. Really confirmed now. I mean, even a confirmed, I said, like, if it breaks 74, exit everything to your portfolio. I was like, nah, that's a confirmed exit. I said, let's sell on strength, right? Pull back, get out, bam, saved a lot. Obviously, the hero move was up here, but at least you got out on the way down a little bit if you were shadowing me. Um, Not that there wasn't things up here. There's a lot of things that was going on in my life that it was hard for me to actually make that mechanical switch. But this is the reality of trading. It will move when it moves and it doesn't care what you're doing. So you say, oh, trend line, and then we broke the trend. I mean, there's a lot of ways to look at this. That's just another moving average you could figure out what you could simulate that moving average. So yeah, I mean, this is the situation we're in. And if we go down on a smaller time frame, right? Which that's why I posted an educational note. Trend up day, less likely for trend up. So this would help you in what way? Well, I mean, if you were really Jones and like you missed the ultimate move here, you would be noticing that it was going right up into resistance, and we know that it has less odds to be a trend day. So it was most likely going to have a problem. Right back into this zone perfectly, and now we're just going sideways because the market doesn't know what it's doing yet. It's still dealing with the bleeding which happened recently and the fact that there is discount prices. I mean, if the market got to what 124 and it got almost half that, you know what I mean? So it's like there are people that are just looking at it that way. It's half off. But it's the fact that it got half off. It's not half off, and we've been in it for months. And oh my God, another bottom building, great structure, confidence. It's like we just had a bloodbath. So there's going to be some action reaction, but why can't this be another, sideways market for a while instead of just reversing. That's the idea. Is just balance it out. But at the same time, this is a mature balance for at least a week or so. It did break at least this time frame bias. So smash move up. We're not fading this now. We are above it. What could happen is we could get another leg up, and then it could have problems up here. And then what might happen is um, well, I don't know where it is. Usually I always can get it quickly, but let's see. Anyway, what might happen is that we just form another balance here. Listen, I know what I can do. Oh, here we go. Why was I having trouble finding that? Oh my God. Okay. So, trends and balances, right? Uh, right. Taking anything up here, you're taking at the range extremes of this zone, right? Key swing high, high volume node, next zone. If you break above the high volume node, more likely to go up and test the highs of balance. But it could fail here. It's more likely to fail here possibly, and then we just have a balance that extends itself, which then could produce. Be ready for it that there could be a buying opportunity for a really wide double bottom down here, right? Just be aware that there could be a really great trade, and this is worth some expectancy. We're talking, if you were able to capture this is a huge move, right? So if we get a repeat of that, it's easier to get in. We've seen it before. It'd be a double bottom. We're prepared for it. It's at the bottom of a balance. I'm keeping that in mind because I just don't. This was a great strength, but then it just like it's really fizzled, right? And we need a lot of unique strength to get a balanced breakout pattern after so much bearish trend energy. So that's the idea that this might need to mature more, and it could may time cycle prediction, other ways of looking at it based on what happened in 2022 could be even as late as next year where we get an uptrend after a sideways market. So that's what I said. Like, you got to be optimistic, and being optimistic is trying to be as objectively systematic about it and applying all these principles, right? And just a short term. Remember the the everything that we're doing from a higher time, not everything, but a lot of the higher time frame concepts are also just helping you top down zero in on what to do the next day. That's tomorrow, or today if you're taking a snapshot, right? So you have this dog leash principle where we're getting after that double bottom, we get a little bit move up. And remember that's going to get counterbalanced if that comes true by these really higher time frame resistance zones that it's going to come up into because of the way it got down there and the fact that we have all these other indicators that we went over, like the death cross and the Gaussian channel, and the way it got down there. That every time it makes a top, it's most likely going to be in a bear market for a while. So that's and even just as we were talking, I think it was 34% relative volume, and it's just went down to 28. So even though this is great, I like to see some green. We haven't had green in a while. It's it's not showing a lot of sustainable momentum for a ridiculous V recovery type of a thing. Even like here, right? This might have been a one that would have faked you out because say, oh my God, we're in a V recovery. Look at this pattern, just like COVID breakdown, right? Short term, right? You have a hammer reversal signal, which is a up candle. You see a V, you're like, oh my God, here's a V sideways dip go. It's a recovery. But then you go up and you're like, realize, like, wow, that's a really strong hook from extremes. And then you say to yourself, well, wait a minute. We just had a hugely strong up market. Then we went sideways. Now this is a strong leg down. This could be a pull. Then we have a death cross here. Why can't we have a pullback continuation on that time frame? And then bam, you get that move down. Then you get triple bottom. Like, so if we were near a level like where we are today after we made a pattern like this falling wedge, that would be a really awesome confirmation. You have the time, you'd have multiple confluences. But on first test, even though this is a nice double bottom, just be aware this could be more of a short term thing than a ultimate low signal. So that's the final word. You know what I mean? Uh, shut it down. Now I'm going to open the floor if anyone has any questions, because that's it for the presentation. All right, no worries. Thanks for coming on. Glad you guys liked it. Keep an eye on that inverse zero line reject, and I will see you guys on the next one. All right, guys, have a good one. Take care.